Hi, it's Jo Bills
And Steve Spencer
from Freshagenda. And Steve, we've revised our Outlook after putting it out in September. We've put out a new Outlook this week.
Yeah, we've updated for a few big issues that we saw developing that was changing the environment quite dramatically in Europe. I've been to Europe in the past week and a half, talked to a lot of people, got a much closer assessment of a developing situation in farm, at the farm level, which is seeing a rapid turnaround in milk supply in the big producers, Germany, France and Netherlands, which has increased the expectations, quickly revised the expectations of growth through the rest of this year and into the spring, through spring next year. I guess the other big thing that's happening in Europe has been some statements made by the European Commissioner for Agriculture, Mr. Hogan, who's dealing with quite a difficult situation. We'll probably talk more about that a little later, but made some statements about the policy position or the policy practice that they might put in place to deal with surplus skim milk powder. That's given the market quite a bit of uncertainty. And while we were there, the market for the futures quotes for butter and skim milk powder crashed. So that's changing the expectations for what will be done with milk, given the returns to that a couple of products in the next year. So that's moved the dial quite a bit.
So Steve, you met with quite a few traders over there. So their sentiment was fairly bearish on this kind of news? Yeah,
that was quite bearish, and the market was falling. Usually you go to a trade show like a Nuga and people come away from a show, go back to their desk, think about what they've said, and then the market falls. The market was actually plummeting while the show was on, so you had some very distracted people around various stands, both manufacturers and traders, looking at big red numbers on the screens as things were falling. The butter market lost €1,000 in a couple of days in futures quotes and continued to settle. So yeah, the mood was quite bearish.
So in terms of the dynamics around those butter and skim milk powder returns, that's what's really weighing on the market at the moment, just that butter has been very strong, but it's now starting to come off from those very dizzy heights. And skim milk powder obviously is down in the doldrums on the very high stocks in Europe. Yeah,
that's right. The butter prices ran to freakish levels ahead of fundamentals last year. We all know that story, and that's given a lot of people a lot of pain. I guess what's been seeping out is there's been a market pushback. So retail numbers leaking out of Europe progressively, and some of those came out last week as well, showing that some double-digit falls in retail demand in the category in some countries. But butter prices have sunk because there's an expectation that European milk will be a lot stronger, particularly through the peak. So again, prices have fallen before the problem's actually solved. So the expectation is that prices are going to be more moderate as you go into 2018. And with skim milk powder though, with more milk coming and less certainty around the policy environment, that's also softened. So the floor that's usually provided by the Commission for certain parts of the year has been taken away and doesn't look like being in place next year.
It's an odd situation really, because we've still got a very tight butter market in Europe.
Yes.
But given these dynamics, very little incentive for manufacturers to put that milk into butter and skim.
That's right.
So, what does it really show, the outlook that we've developed in the last week or so? How have we sort of accounted for this additional milk out of Europe?
So we've looked at the likely product mix implications of that, and naturally the cheese market is critical to the balance in Europe, and we've seen, I say it's 2/3 or more of milk is used in cheese, semi-hard cheese. That's with higher production, we're going to see more cheese production, but inevitably more of that's going to go to commodities. So skim and butter will probably receive some more product. There's not that much flexibility in most regions. So it tends to, in the past, when there's been a surge of milk, the practice has that does go to the skim butter combination. typically. There's a little bit will go to whole milk, but that's not as favourable for Europe. So that's how we've handled that. We've looked at the history of those product mix swings year to year and at different times of the seasons to get some understanding of what might happen. And that's a complex story, but it's the falls in prices have shown that the butter and skim combination erodes quickly, and we're showing a picture now of how that looks on current future quotes. It falls away, and so cheese is going to be favoured, and that's going to be dangerous for the cheese market, because if milk moves to chase cheese and we see prices of Gouda and Edam and cheddar start to fall, that's a bigger problem for Europe than the fringe products and the commodities.
So we're going to have to hope that cheese demand, domestic cheese demand, stays strong, and it has been quite strong, and may strengthen on slightly lower prices. But also it's been a fairly good story globally in terms of cheese demand, hasn't it? So we need to hope that demand continues to be fairly robust. In the EU's short-term outlook last week, they mentioned particularly Eastern European demand might be a bit stronger for cheese at lower prices, and with the economy improving a bit. But there is still a very, very big impact flowing from those EU policies and where they go with this very large and almost unprecedented intervention stockpile.
So we've got the crazy situation where we've had intervention open since late 2015, second half of 2015.
It's never been open this long, or not for a...
That's right. It hasn't stayed open. We mean, back in the dark days when this first was used, it probably were long periods when the Europeans were more heavily intervening. Now there's more budget pressure on what they're doing. So we've had this long period of intervention opening. We've got up to almost 400,000 tonnes of product in the sheds, but milk prices in Europe, which is the main barometer of pain for the politicians, are quite strong and getting stronger.
So they're getting a positive signal around production.
Farmers have been encouraged to produce more milk. They've got a good season in front of them. They've got low feed grain prices. They've got strong milk prices. And what's usually the result of an intervention program is that the stocks are taken off the market tightens, prices rise, and the Commission can let those stocks back out to the marketplace with good prices. We've got quite the reverse going on. We've got a high stockpile, we've got very low market price for skim milk powder, and no apparent solution in sight, because if we project forward, and we're showing some of the scenarios on the screen right now, that we've done some work on the scenarios for the skim milk powder stockpile going forward into 2018. It's very hard to get a scenario where the intervention stocks start to come back out to the market. We think more product is likely to go into intervention. So the policy statements that, or speculation, as some have said over there, that were made last week by the Commission, have talked about putting more constraints around the sale of product into intervention, talked about almost a zero support price, and making the conditions much harder for sales of product into intervention.
So how does that all jibe with the Commission's forecast of 150,000 tonnes of sales from that intervention stockpile?
Well, no one's quite sure where that's going to go.
Right.
Ultimately, that product, because of its ageing and how long, obviously, before it might get to the market, is destined for the mouths of pigs, it seems. But just that replaces some other product, and it's hard to see how that volume, which is about the annual feed grain market in Europe in an annual sense, it's hard to see that's going to happen. Our numbers would say the reverse. There's probably somewhere between 50 and 100,000 tonnes going to go into intervention if it's open.
If it's opened. Yeah, but a lot of uncertainty around that. I suppose just in the last couple of days, following on from Fonterra's revision of their intake for this current season, there's been a bit of speculation around the New Zealand milk situation.
Yep. So they've downgraded their production forecast or collection forecast for the current season down to an increase of just 1% from 2.5 to 3 earlier. It's still raining. I looked at some weather charts this morning. We're looking at them here. So there's whilst it's a little warmer than normal in New Zealand, there's still quite a bit of rain falling and not a lot of sunshine, so less than average. So we're still yet to get through to the good part of spring where, you see grass surging out the ground and cows munching and turning that to milk. So naturally, I think Fonterra's been a bit more cautious this year about sending that signal to the market, given past seasons where they've called things early. But there's always the shoulder, and the shoulder usually has a big impact on the full season. It's expected to be warmer later. The other thing to think about is Fonterra doesn't have all the milk in New Zealand, so there's probably another 1% or so in production. So, we might be looking at a 2% at this current forecast. We haven't touched ours yet. We'll wait for a bit longer before we look at that. We're a bit more optimistic.
Yeah.
That the later season conditions will pull more milk out. Yeah,
we have seen in the past few years that Fonterra around this time of year will come out with a forecast downgrade. The market will react. The forecast will be wildly inaccurate, and there'll be more milk than was originally forecast. So there has been a bit of a credibility issue, but it seems like there is some real evidence that it's a bit tougher in New Zealand at the moment than the last couple of years.
Yes, it does. And I think that's a situation to keep watching. But again, dwarfed by what's going on in Europe, I think, in this next 6 months. So that's possibly the market's factoring in some of that already. And of course, what it means is if you flow that through, if there's more milk in Europe and weakening the skim milk powder price, New Zealand's milk might contract. It may not change the whole milk powder price outlook because of the strong influence that a lower skim milk powder price is having on the market at the moment.
Yeah, it's a bit of a collar on whole milk powder prices when skim's so low, isn't it? Because where people can substitute, they will. Yeah.
And we've seen a lot more fat-filled trade. Vegetable products are pretty cheap, and that's encouraging either production. There's big production in Europe that's occurred, and there's production in market regions where they've got the capacity to do that. So that's putting a brake on the gains in whole milk.
We're not painting a real positive picture about the outlook for commodity prices. So how does this all come home to Farmgate prices in Europe, say, and as well as in this part of the world?
Yes, in Europe, the other part of the talk over there is that Farmgate prices are going to be firm through till Q2 next year, which is a bit alarming because that strong price signal through spring is the problem. We'd be hoping that farmers get an earlier signal to put the brakes on production over there. Mostly cooperatives, mostly with the objective of optimising Farmgate returns. So whether that can be argued in the boardrooms effectively to say, hey, we've got a bigger problem coming if we don't weaken off a bit. There's other things going on. There's a lot of competition for milk, particularly in Germany, where the bigger player is under trouble. So that's put pressure on that, and they're optimising price as far as they can. So it's all about let's pay what we can now. Don't worry about tomorrow yet. I'm afraid. So wholesale price in Europe is still good. In actual, that'll start to soften as we see these influences go through the market. Coming out to this part of the world. What we're seeing is probably not going to change the Australian or New Zealand outlooks in the short term for the current seasons, but we'd expect next season to be weaker. So we think something like with our commodity value projections at the moment, and they're only rough right at this stage to see how this plays out in the short term, but we'd say we're looking at a 30 to 40 cent downgrade from what we were previously saying. So that would put the commodity value of milk under $5 on our current reckoning for the following 18-19 season in the Australian region. So that's an alarm bell.
So that implies sort of low fives for
that's correct.
Indicative price. How does that compare with where we're sitting for this current season?
Current season, we're still sitting up near $5.90 as I think the midpoint of our range per kilo milk solids, a Farmgate value. So that's a slice of about 50 to 60 cents on current reckoning. So things could change. Europe didn't have a spring last year. It got truncated, and that was the big surprise that boosted prices. So it is still down to weather in a large extent that could hold the balance here. But we're calling this as this is a red flag This is the danger signal, and let's be cautious.
Yeah. Well, it's good to get that early warning sign and be able to monitor it as things develop. As you say, we've still got a long way to travel, but...
Yeah, look, we've got a platform that allows us to do that, and adding up all these signals we're getting and how that flows through into, the expected global balance for milk and ultimately values. So that's the idea of it, is to keep those projected signals and projected values out there in front of people, so that these aren't surprises going forward. Yeah.
Okay.
I think that's a good wrap.
That's a good wrap of our update and what we're seeing at the moment. So thanks for that, Steve.
That's a pleasure. We'll be back sometime soon.